Jai Sri Krishna. Knowledge can only be volunteered. It cannot be conscripted. Don't you think every business should speak a common language to make financial statements consistent, comparable, and transparent across the globe? Since that point, IFRS standards have gone on to become the de facto global language of financial reporting, which is used extensively across developed, developing, and emerging economies. IFRS standards strengthen accountability by reducing the information gap between the providers of the capital and the people to whom they have entrusted their money. But what do they mean to your business? Find out everything you need to know about this in the skill enrichment session. And now, Dr. Akila Ma'am, Head of Department Finance and Taxation, we welcome the participants.
Jai Sri Krishna. Happy morning to all of you. On behalf of the Department of Finance and Taxation, it's my pleasant duty to bid you all a very gracious welcome. First of all, in absentia, I'm delighted to welcome our principal, Dr. S. Santosh Babu sir, who constantly support us both as in academics as well as to grow as a human beings. In absentia, I also would like to special mention to our beloved secretary for giving us constant support, guidance, and confidence. Amidst us, we have such a wonderful resource person and speaker, C.A. Deepak Agarwal. So fortunate to have him today, as we are eagerly waiting to hear from him in this session of knowledge sharing and enhancement. So participants, please join me in giving our guest the most cordial welcome. I also take this opportunity to honor and welcome all my colleagues and fellow faculty members who have made huge effort to join us today, despite of being a working day, so for this skill enhancement workshop. I deeply appreciate and offer my grateful welcome to all the dearest of dearest students, and I look forward that you learn, experience and practice whatever you have been offered beyond your classroom and curriculum. Once again, I welcome you all and wish you a resourceful couple of hours ahead. Thank you.
Okay, so can I begin, Mia? Or
Now, Harsh Jain will introduce the resource person.
okay.
A very good morning to one and all present here. It is my pleasure to introduce and welcome the chief guest for today, Dr. C.A. Deepak Agarwal, sir. So, in a country where many find it difficult to even clear the chartered accountancy exam, sir is a qualified chartered accountant and he also holds a certificate and a diploma in IFRS from the ACCA. He is also currently pursuing several professional courses like from the Association of Chartered Certified Accountants, Certified Management Accountant CMA from USA, Chartered Institute for Securities and Investments. So these are names which I'm finding it difficult to even pronounce, and sir is currently pursuing them. And he's also an expert in these fields. Uh, Deepak sir is passionate about trainings and is currently a senior faculty with ISDC. He has conducted various professional courses, training programs in the ACCA, CIMA, ICAI, and the IFRS domain in huge organizations like Infosys, Genpact, several international hotel groups, Deutsche Bank, HSBC, SunGard, and Fidelity Insurance. Sir has also authored several books, and he has played a vital role in developing the study material for the Institute of Chartered Accountants of Tanzania. Even though Deepak sir might look quite young, believe me, he has an industry experience of 7 years. He worked with Sharp and Tanner and Associates, wherein he handled audit, taxation, consultancy, and due diligence assignments for various listed companies. He also worked with Credit Suisse on behalf of Wipro Technologies. At Credit Suisse, he was a part of the regulatory team which handled Basel reporting. Apart from areas of accounting and finance, Deepak sir is also very passionate about cricket, watching movies, and listening to music. I welcome you, sir.
Thank you so much, Harsh, for the introduction. I really feel 39 years young after your introduction. So really thank you for the warm welcome, and thank you, Akila ma'am, for hosting this online session. I'm so glad to be amongst you all and amongst the students to deliver this session on IFRS. So I hope it is a wonderful learning experience for all of you, and I'm able to add some thoughts and knowledge in this session. So, can I begin with the session, or we are waiting for somebody?
Yes, sir. You can start the session, sir. It's over to you, sir.
Okay, thank you so much. I'll be sharing my screen, and I want this session to be interactive though. I know the participants, there are a lot of many participants, and interacting with all of you may not be possible. Yes, by way of chat, or maybe you can even talk to me whenever you have a question. I would be glad to answer any questions you have.
Sorry to
So
interrupt you between, sir. Sorry to interrupt you. Participants
yes,
can very much post their questions in the chat box. So as
okay.
and like if time like as if possible, as and when we will clarify the doubts, or else we
Okay.
can do it at the end of the session, sir.
Okay, I mean, this has to be a continuous session, a broadcast session from our end, right?
Yes, sir. Yes, it is.
Okay, okay, I understand it. So that's fine. The today the topic which we are going to discuss is a very technical topic, IFRS, and when we talk about this IFRS, it's all about reporting standards and financial statements. So I mean, why IFRS? Why what is the challenge? I mean, why did we start adopting IFRS? See, when we talk about business, business is now just not confined to the national boundaries. We are now inviting multinational companies to come in India, and this has been a case with many countries where businesses have expanded like anything beyond their geographical boundaries. Now, when you go to another country, like I would just give you an example. Let us say you go to China. What challenge do you face? I mean, when you're talking with people there, the native language is Chinese. You find it difficult to interact with people. Now, take the same case with a business. When they come, they expand, and if they don't have that proper guidance or the proper reporting standards, what would happen? There would be a challenge, in reporting the business, and this challenge can be only overcome with a common language, and this language is called as IFRS, International Financial Reporting Standards. So as the name says, it is international. So it has no preference that it has to be an Indian or it has to be Chinese. I mean, any country in the globe can adopt these standards and start reporting their businesses under IFRS. So today, what are we going to cover up in this session? We are going to talk about what is the role of IFRS. We'll talk about who are the regulatory bodies behind this IFRS. We'll talk about some thing called as the conceptual framework. So we will see what exactly is the role of that conceptual framework, and I have some case studies, small ones, to illustrate how IFRS will help us in fair accounting. Now, the topic which we are dealing today is such a vast topic that putting it across in 1 hour and 1.5 hours is very difficult. But I'll give it a best try. I'll not use very technical words. I'll keep it very layman, and I want you all to learn from this. Do not be bogged up with big standard numbers and the names. They are just there. You when the time comes, right, you will definitely learn all of these, but you can take this as an introduction to all those technical things. So let us understand what is the role of IFRS. So as I said to you, you connect to the IFRS, and definitely it's a connection to the world. Now India too has started adopting IFRS. We'll come to that part at the end of the session. But I want to give you a perspective of how IFRS would really help you. And to understand, IFRS, we need to understand the perspective. And perspective has to be very right when we're looking at these standards. Think about, a perspective reminds me of a story about a young Indian guy who's a marketing guy, and he goes to the Middle East for marketing a cola brand. Now the bosses want him to develop a advertisement campaign, and to increase the sales. So what this guy does is he makes three banners, three boards basically, all well LED lit boards. So one board having one guy who's very thirsty. On a second board there is a bottle of Coke kept on a table, and a third banner where he's drunk that bottle and he feels quite refreshing. So when he puts it across the city, what happens is, I mean, he's just waiting, the advertisement to click and connect with the audience, and the sales to increase. But 3 4 months down the line, the sales are not increasing. The directors are on him that we spent millions of dollars on this advertisement campaign and no result has come. Now this marketing guy is very very tensed. He calls up his friend in India and he takes his advice. His friend, though a brilliant person, his advice seems odd to him. So what his friend advises him is that you reverse the banner. That means that last banner wherein a guy was refreshed, you place it first, then the bottle of Coke, and then looks very thirsty. So he says how this would work when the sequence is changed. He said just trust me and you do it. And he goes back, does this same thing, and in 2 3 months time the situation is reversed. Sales have started picking up. So again this guy, this marketing guy, he wants to thank his friend and he calls him up again. He said what worked? I mean, I am really curious to know. I really followed your advice. So he says, my dear friend, this is a matter of perspective. So I said, perspective. How does perspective play a role here? He asks him. So he said, perspective was like, where are you? You're in the Middle East. And in the Middle East, they read from right to left. So when you put your banners in the first go, the perspective was not right. And now when you change the sequence, the audience is able to connect to you. So this is just an analogy to help you understand that why we need IFRS as a common platform wherein we can connect with the audience, we can connect with the world. So this is important that we understand IFRS is as something global, and we are also going to study this because we want to come to that common platform. Now, just a bit of graphs and some statistics which I want to throw in front of you. 20 years back, if you see, IFRSs were a very small dot there, the red full dot, which you can see the red bubble, and mostly the predominantly the bigger part was like US GAAP and the local accounting standards. Now today the situation has quite changed. IFRS is being adopted by many countries. So you can see that red bubble being expanded. The national accounting standards have reduced. US GAAP pretty much remains the same. If you see, going forward, there will be only IFRS. Slowly, US GAAP is published by a body called FASB, Financial Accounting Standards Board. So slowly, US GAAP is also merging towards IFRS standards. And going forward, national accounting standard, which we call it as local accounting standards, will be very very less. So what we are aiming tomorrow is a international financial reporting standards. So what are these IFRSs? They're nothing, set of literature, I would say. Would say, around 50 60 standards are there today, which deals with several areas of accounting, telling you exactly what you need to do, a kind of a guidance in accounting. Now, this is just a kind of a pictorial map to help you understand how IFRSs are spread across the world as of now. So you can see the green shaded portion wherein a majority of Asia is covered there, Europe is covered there. So you can see a lot of green on this global map, which represents adoption of IFRS, or they are in the current process of adopting IFRS. So these all maps I've taken it from the reputed websites like IASB. So we can rely on these pictorial representations. Now, just to give you a statistical overview, if I take the continents and I see the jurisdictions, I can almost see that, on an overall basis, 87% of what you can say the adoption has occurred in out of 166 jurisdictions, 144 jurisdictions have adopted IFRS. So this figure comes to 87%. And if you see Middle East and Europe, they're quite near to completing almost 100%. Where Middle East is almost 100%. African countries, they generally adopt IFRS. See, because the reason is in Africa, the accounting standard boards, the local boards are not so strong. So they prefer to adopt IFRS, and even IFRS lends a lot of support through World Bank, and it helps a lot of accounting bodies to adopt IFRSs in the local and domestic regions there. So we still see Asia's and Americas slightly lower, but then we are inching towards it. Now, I did explain to you what is IFRS, that these are global set of, accounting standards. But then how is it different from our local accounting standards? I mean, just to give you a perspective and how things are different, if you pick up the Indian accounting standards, which are issued by the Institute of Chartered Accountants of India, this is the prime body which has been issuing, and then these are being adopted by the Indian companies. Now, India being an agrarian economy, when we got our independence, from that time, we don't have one standard which is called as agriculture. Now, agriculture was the backbone of, and the Indian economy, and it is still it. Though I wouldn't say it is the primary part of our GDP, but yes, agriculture does play a lot of role in the GDP. Now, though this activity is such an important activity, we don't have an accounting standard in the Indian literature. So this is where the IFRSs come in picture. IFRSs do address agriculture accounting as one of the issues. Now there are several issues which are covered in IFRSs. I mean, talk about customer loyalty program, share options. I mean, how technology companies are accounting, how you're accounting properties. That's completely different in the IFRSs. So many think, I know Indian GAAP. So from Indian GAAP to the IFRSs, it's really easy. I'll just create a bridge, and I will go to that, new standards called IFRS. Trust me, it is not so. For you to understand these new IFRSs, new style of IFRSs, what you will have to do is not just create a bridge, you will have to unwind yourself and start afresh, because the literature what IFRS is based on, the principles on which it is based on, it is very very different from your local gap. So what you will have to change is what you understand about accounting. Is very different from what IFRS needs. I will be giving you a few highlights how the accounting practices differ in the IFRS compared to your local gaps. See, some of the differences is in the terminology. You would say that terminologies don't matter much. It's pretty much just a name change. Do agree, but then when we are talking about international standards, the terminology also has to be global, and that's where I mean, typically till date we were calling it as a balance sheet, but in the IFRSs we now call it as a statement of financial position. So basically, I mean, if you see, a balance sheet name represents that you're balancing something. It's a sheet which balances something, but IFRS is addressed that the purpose of a balance sheet is really to display the position of a company. It's the report card of the company. So a more global name would be a statement of financial positions. You can go through the list of the names which are different in the IFRS. I mean, to highlight some of the terminology, stock, the second last word, stock, will now be addressed as inventory. You were calling debtors and creditors. We will now call it as receivables and payables. You were calling it as fixed assets. We will now call it as non-current assets. So things are little bit different from what you have learned in the Indian gap. Why learn IFRSs now? What is the big deal in it? So IFRSs have become very important. India has already adopted the IFRSs, and you all know a lot of foreign investors are coming into India, setting up their bases, and recent one being Apple to come in India, setting up their manufacturing unit here in India. Lot of companies are coming into India. India has become one of the hubs for outsourcing technology or finance related work, and even medical transcription work. So for these companies which are setting up their bases in India would definitely need accounting to be done, and that's where you should be aware of IFRSs, because that will really help you. Now, lot of foreign capital is being raised. You must have heard of FDIs, so foreign direct investments. Lot of foreign investors and firms are pumping in capital in India. So it becomes very important to learn IFRS, but as again the accounting is going to increase. Now, job opportunity for Indian accountants will jump. So we all know Asians are known not only in Asia. I mean, there's a lot of respect in the Middle East and Europe. And Indian accountants, they are reputed for their number crunching skill, their decision making, their analysis. A lot of CEOs and CFOs are Indian CFOs are heading multinational companies. So job opportunities are ample. And tomorrow, if you go into auditing or into finance, the knowledge about financial statements will be a must. So it's very crucial that you learn these IFRSs now. And if you learn it now, I always believe that you will definitely get an edge over others. So I mean, think about, you become the superior, and then the generations to come will follow you. So you have an opportunity to shape it. You have the opportunity to drive it forward. Now, when I come to the contents of IFRS, I mean, if I just show you the book, it's like a thick, fat book of just like a Bible of standards, I would say. There are close to around 50-55 standards. You will say, sir, I can see 41 and 17, so that should total it up to approximately 60 standards, less than 60 standards. So not really, because some standards got deleted during the last 40-50 years of their issue. So yes, close to around 50-55 standards we have. There are some interpretations also, and which have been issued as a supporting role to the accounting standards. Now, some of you may be wondering that sometimes we call it as international accounting standards and sometimes we call it as IFRS standards. See, IAS started with the formation of European Union. That time, the body which issued the standards, they titled that series under IAS. By 2001, when the body had grown old and IAS had been adopted by many countries, the body was revamped. The new body, which took over the reins from the old body, said that we are going to continue with IAS, but from today, that was the year 2001, that new body came into picture. They said that we are going to now start writing the standards, whatever new standards are issued under the IFRS series. So basically, IAS are there, and IFRS is, we can say, are the recent standards on a newer accounting issues. So don't get confused when anybody asks you that what is the difference between IAS and IFRS. They both mean the same. They have that same applicability. It's only that these two were issued by two different bodies. Now, coming to who issues the IFRS, I'm not going to bore you with a lot of details on this slide, but yes, we can talk about couple of bodies which are involved in the standard setting process. So one of the major body which you should be aware of is the IASB, International Accounting Standards Board. So IASB is just like the ICC. You must have heard of International Cricket Council, right? So if you just compare IASB with ICC, the role of ICC is to develop laws of cricket, bylaws of cricket, regulate the game of cricket. Same way, IASB's role is to develop accounting standards for various companies. So that's the role of IASB. So they develop principles of accounting for the companies, we would say. So this body, IASB, is a very small body of 14 members. See, even Indians have a representation on this body. So I forgot the name of the person. I think he was Mr. Pillai or Mr. Shenoy. He was the ex-comptroller auditor general of India who represents India on the IASB board. Then IASB, being a small body, is being held by a body called as the Advisory Council. And when the standard is issued, if any clarification has to come, this is coming from the interpretation committee. On top of all these three bodies, this is 1, 2, and 3. This IFRS Foundation acts like an administrative body. Now, what is the role of this body? It is to appoint the members of all the bodies, to provide finance, to fund research projects. So that would be the role. And this body, monitoring board, it kind of goes to the globe and it talks to the various companies in the globe and collects their feedback so that this feedback can be passed on to the IASB, so to develop accounting standards. So basically, this is a very cohesive body which works together, comes out with the IFRSs which are globally adopted, accepted worldwide. And all this process is done by involving the member countries, the accounting firms like Deloitte, KPMG, PwC, Ernst and Young, which are, and even the companies which are free to give their comments and opinion on these accounting standards. So this process is very systematic, and it takes care of the needs of all the member countries. Now, just to orient you, that what are the financial statements in the IFRS domain. Now, when I talk about IFRS GAAP means generally agreed accounting principles. We have five types of financial statements. The traditional balance sheet, now called as the statement of financial position. the traditional P&L, now called as statement of profit or loss, and other comprehensive income. We have a new statement called as the statement of changes in equity, then the cash flow statements, and finally the notes to financial statements. Now, what is not included is the director's report, the chairman's statement. So, there's a chairman to the company who issues his part of the write up about the year, about the company. That's called as the chairman's statement, and some kind of discussion and analysis which management gives in the annual report. So these things are not included. Just excuse me 1 minute. Now you all know what are the objectives of each of these financial statements, but I will run you through for next 10-15 seconds. So a balance sheet or the SOFP provides you the financial position in the form of the asset liabilities. When you talk about SOPL, statement of profit or loss, it provides us the financial performance in the form of income and expenses, and cash flow statement gives us the inflows and outflows about the cash flows. Now, to give you a perspective, what IFRS is help you to apply your knowledge. So if you see on your screen, you see this famous actor. Everybody knows this famous actor, Brad Pitt. So if I ask you, is Brad Pitt an asset for the production house? And I compare, David Beckham is the UK's most famous footballer. So if I ask you, is he an asset? So you would definitely say that both are assets, and I do not disagree with that fact that yes, both these celebrities are very prominent in the work they do. But if I ask you now from a financial statement perspective, that can these people be recognized on a balance sheet? So, I mean, can Brad Pitt come on a balance sheet? Can David Beckham come on a balance sheet? So, the answer to this question is that Brad Pitt cannot come on a balance sheet. But when I talk about David Beckham, he can come on a balance sheet. So, what is different? I mean, these are two people, but then one is not an asset, but one is an asset. So, how do we differentiate? How does IFRS helps you recognize what is an asset and what is not an asset? The answer is that the definition of asset needs to be clear. So you and me both cannot apply our thinking, our knowledge. I mean, our knowledge comes from our 10th standard, 11th standard, 12th standard. Our teachers have taught us some things. We have read on the internet some things. So we have that notion about what is an asset, but it cannot be our notion. It should have the same definition. So, if we have that same definition, here the application differs. See, I'll tell you why. What establishes an asset? One of the major ingredient is control. So we can say that in case of David Beckham, we have control over the contract which is there for David Beckham. We can have a market value. So most of these players are traded within football clubs. They have a contract period, so we can have a useful life. They have a residual value, so that means if you want to trade any player, you can trade it. So it's just like how we have it in the IPLs. Trading happens for the players, and you can expect benefits which are probable. But talk about Brad Pitt. Does he is he associated only with one movie house, production house? I mean, can they control it that he can't do any movies with others? So that's not possible. I mean, he's not there for sale. I mean, just like footballer, he can be traded. An actor cannot be traded. and you do not know for sure that what are the benefits with certainty. So these all, situations, these all conditions, what we discussed, define what is an asset. And all these definitions are not coming from me, not coming from the internet, but they are coming from the IFRS literature. Remember, IFRS literature is a principle based literature rather than a rule based literature. See, what is the difference between principle and a rule? See, principles give more flexibility. When I talk about, principles are like, something where a human would take some decisions and go beyond the rules, I would say. See, rules are very hard coded statements. So a rule would be something like a software program. So software program will never diverge from those rules which are set into the programming language. They will behave in the same way. But when we talk about principle based, they don't behave like rules. So we can apply principle based framework to broad range of issues, but rule based frameworks will be applicable only to very limited areas. Now, some example of a rule-based framework. So I would say that, the US gap is primarily a rule-based framework, whereas I would say IFRS is our principle-based framework. There's one document which the IASB has issued, which is called as the conceptual framework. And many students, when they study the IFRS standards, I recommend them that, this is the first document which you should study from. You should read this document thoroughly. Now, what is the conceptual framework? What is its role? See, basically, I'll give you an analogy of how conceptual framework is really important. Think about your, computers. In a computer, what is the most important hardware? I would say the most important fundamental hardware is the motherboard. Because if there is no motherboard, even your processors cannot interact with the various other units and hardware. Motherboard is the key, wherein data transfer, data exchange, everything happens systematically. Now think about, if the motherboard is a old motherboard, 10 years old, and you try to put in the latest hardware, it won't work. So motherboard defines all the rules, all the definitions are there, and on the basis of it, you can join any kind of gadget to the motherboard, and it will work properly. Same is the case of conceptual framework. So conceptual framework is the base. It defines certain, things. Like what majorly it defines is, it defines all the elements of financial statements. So you can see these are the elements of financial statement. So if you say what is an asset, what is a liability, what's a equity, income, expense, these all definitions are hard coded into the conceptual framework. So it cannot happen that when you say I'm accounting for a non-current asset and I'm accounting for an intangible asset, the definition of asset is changing. It remains the same. The concept in non-current asset and concept in intangible asset, only that extent that standard would, address. So we would say that, the conceptual framework acts like a standard of all standards. It not only gives you definition, it also gives you certain fundamental qualities which need to be there in each financial statement. See, a lot of words are appearing, I know, on your screen. So qualitative characteristics, I mean, what are these qualitative characteristics? If you pick up any annual report, I'm sure everybody knows what's an annual report. So all listed companies and even private companies have to issue something called as an annual report. Now, in the annual report, they display all the financial statements. And when you read those financial statements, obviously you rely on it. And this reliance comes because these financial statements are ensuring certain minimum quality standards in the form of they being, faithfully representing, they're free from errors, they're complete, they're having all the, essential characteristics to be relied on. And where does it come from? So all these, qualities have been defined in the conceptual framework, and every company, when it prepares its financial statement, has to rely on these qualitative characteristics. Now, a typical statement of financial position looks like, like a balance sheet. You have the asset side, but here remember the asset side is divided into two parts. One is the non-current assets and current assets. So earlier I remember in the 12th standard we used to fold the page and write all the assets on the right side and all the liabilities on the left side. No, now you will have to bifurcate, is it current or non-current. On the liability side, now you should be clear that it's not just the liability side, it also has something called as the equity side. So you will have equity plus the liability, and the liabilities would be divided into non-current liabilities, which you can see on your screen, and also it will be divided into current liability. So this is important that you bifurcate your liabilities into current and non-current. This is something which IFRSs have made it very clear that you just cannot put a liability without classifying it as current or non-current. You have the profit or loss account, or we call it as the statement of profit or loss. So instead of the, the traditional trading account, and then you had the P&L account, all this is now come under a vertical format. See, this is a recommended format. I wouldn't say that your format of trading and P&L was wrong, but now they are expecting, you to follow this format in the IFRS. What I have seen in the annual report, the financial reports of companies, they really like to stick to this format. So reporting is done in this format. So a new statement has been added into the IFRS literature. We call it as a statement of changes in equity. So basically, this statement tells you that your equity balance, what was there last year and what was there this year, how did these two balance change? Now you would question me, how changes occur. See, it can happen because of several reasons, but to name few, you might issue shares. So if you issue shares, obviously your share capital will increase. When you pay your dividends, your retained earnings are going to go down. When you have profits, your retained earnings will go up. And that's how a change in equity happens. One of the areas which you all need to be clear about is the difference between conversions and adoption. See, in India, we have not adopted IFRS. Let me just correct you, or in case by mistake I've used the word adoption, let us very clearly say India has converged to IFRS. Now, there's a big difference between conversion and adoption. See, adoption is something I take those IFRSs and I exactly apply as it is. See, in a country like India, we have a big economy. We have so many companies. We cannot take IFRSs and simply tell companies from tomorrow you start adopting these set of standards. I mean, there will be chaos. The economy, will be in chaos. We want this adoption to be a so slow process. So what we did was we took the IFRSs, but at certain places we gave them an Indian touch. And what I mean by Indian touch, I'll give you one example on how changes are there in the Indian version of IFRS. So in India, goodwill accounting, when we do in India, goodwill is amortized over a period of 5 years. But if you talk about the original IFRSs, they will never allow goodwill to be amortized. they only allow for impairment of goodwill, which is very different accounting. So what we did was we Indianized the IFRS to suit our companies, to suit our needs, and we are not, would say 100% like IFRS, but I would say 90 to 92% we are near to the IFRS. There are 10-12% difference between the IFRS and the Indian accounting standards at the moment. I told you about, I'll give you about the picture of IFRS is in India and how we have adopted. See, in India, we don't call IFRS as IFRS. We have titled these as Ind AS, that is Indian Accounting Standards. So this is the new name under which we have started using. See, IFRS adoption started in 2016-17 for corporates. So remember, this slide is for corporates. So when I talk about IFRS conversion, I think the 2015 budget first time honorable prime minister spoke about coming on a global platform like IFRS, and it was there in his budget speech also. And from that year, the process has been very strictly being followed, and the phase started in 16-17. Now we couldn't tell every company you come and start adopting IFRS. So it was there in phase one and phase two. So with phase one, first all the listed and unlisted companies which are having a net worth of 500 crore or more were told to join. Then in the second phase, wherein it was 17-18 financial year, unlisted companies and listed companies both with net worth of 500 crore or less were told to join. So this phase wise implementation kept on happening. So you should be very clear. The first phase, I mean the first year which we started adopting is 2016-17. So as of now, let me give you a summary of it. As on today, all the companies, whether listed or unlisted, are reporting in IFRS. Now this second slide looks like the previous one, but if you note the title of this is NBFC. NBFC means non-banking financial companies. So for them, the roadmap has been slightly delayed, and though these are companies, but then NBFCs were kept separate. Their conversions to IFRS started in the year 2018-19 for phase 1 and 2019-20 for phase 2. So you can see financial year 1920, which is for the year which went by, the reporting was in Ind AS. Now there are a lot of details on these slides. If we go through every detail on these slides, probably I mean we won't end this session at this point of time. So I'm just keeping it short and simple. Of course, all these details are there for you to note and to churn the details later on. One of the process on adoption of IFRS in India was setting up the NFRA. So this NFRA was like a kind of a body which will monitor the regulatory compliances, maybe accounting standards and auditing standards which companies have to follow. So we needed one body, separate body, and till certain point of time this work was being done by ICAI about regulating the accounting standards and all, but government found thought of coming out with an independent body. So In India, if any accounting standard has to be published or made applicable to any company, so the process is that the ICAI, that is the Institute of Chartered Accountants of India, they are just drafting a standard, or they are just coming out with the standard. But if it has to be adopted or not, that comes through Ministry of Corporate Affairs in India. So they will advertise, they will bring about a notification that who it will apply, when it will apply, how it will apply. So this application is done by the Ministry of Corporate Affairs. And then what I said was the monitoring part. Monitoring is done by the NFRA, National Financial Reporting Authority. I just wanted to give you a taste of how IFRSs are different from the regular accounting standards. And I thought about a case study on revenue recognition. Now, we all know revenue recognition is one of the key areas in accounting. Lot of accounting scandals have taken place just by inflating revenues, and companies do like to do creative accounting in this area because it impacts everything in the balance sheet and the P&L. Now, I'll talk about a mobile phone company. You can compare it with Airtel or Jio or Vodafone Idea. So they have come out with a scheme that they will give a free handset when you sign a 2-year contract for a provision of network services. Now, handset has a price of $100, which they are giving free anyway, and the customer has to sign a contract for 2 years, and $20 per month is the charge. Let us say. Now, if you have to recognize revenue over this contract for a 2-year period, what would happen is, I mean, you will say, sir, it is so easy. We can easily, recognize revenue. You're getting $20 per month. So for 12 months, you just multiply it by 12 and you recognize $240 in year one. And then in year two, you recognize another $240. So this is very simple. I do agree that this is a very simple treatment. But remember that is the mobile phone company only selling the service, or is it also selling the handset? And that's where revenue recognition under IFRS comes into picture. So if you talk about IFRS, there is a standard called IFRS 15 which deals with revenue. Now for them, and I'll just show you quickly how to allocate revenue between handset and the service. Now you know that the company has two performance obligations. So these are called as performance obligation. Now obligation handset and obligation to deliver services over 2 years. This is the standalone price. 102 years contract means 20 into 24 months, that gives you 480. Now, if you know the breakup in terms of percentage, that 17% of this total contract represents handset and 83% represents service, you can easily allocate now to the amount you collected. So basically, you collected how much? 480. For year one, what would you take for handset? 480 into 17% you will take to handset, and then 480 into 83% you will take towards service, which will be spread equally over 2 years, which is 199 and 199. So you see now, we are just not recognizing revenue very simply like 240 and 240. So if it was your local standard, they would have accounted 240 and 240, which is wrong now under IFRS. So IFRS is assumed that nothing is free. There is a cost to everything. There is a value to everything, and we need to compute that value. So I mean, that's it from my side about the IFRSs and a glimpse into how these IFRSs work, what is the core logic on which these IFRSs are based on. And we do have one small activity for all of you to attempt that activity, which will take us another 10 minutes. So officially, I would say my slide comes to an end, and we do have a questions and answer round at the end of the session. Akila, ma'am, what would you advise? Can
Yes,
I
sir. Yes,
move on
sir.
to the activity?
Sir, it's up to you. Either you can take the questions right now or you can do it after the activity also.
Okay, I think we'll do the activity first,
Yes,
and
sir.
then
Yes.
we'll go to the question and answers.
Sure, sir.
Yeah.
Sure, sir.
So just I'll tell you how to attempt that activity. So let me just start my live quiz. Okay. So we will now please follow my instructions very carefully, and if you can see my screen there, everybody. So what you do is you go to this website called joinmyquiz.com. So you can log in through your mobile, you can log in through your desktops if you're looking booted through your desktops, and just punch in the code 771911. So once you do that, I would be able to join you in a quiz. So this quiz which I've made is just a 5 question quiz with options, of course. You just need to say yes or no, or just take the options, and it would take us roughly around 5 to 7 minutes. So whoever answers, I mean, you can put your name when you join in, your real name, and it will appear on the screen as to who leads the quiz. So it's very interactive. It's a fun. Let's see how many of you would like to join in and participate.
Can
So
I
I'm
give
still
them some
waiting
time?
for
Sorry.
participants.
Can I can we give them some time, sir, to just
Sure, we
log?
will give them 2 3 minutes. I'll give
Yeah.
them 2 3 minutes. So I will come to know once participants join here. So
Yes.
right now there are only 0 participants, then nobody
Yes.
has joined.
They will join, sir.
Right. So I see the first participant Darshini Swati has joined. Right, that's
Students, you
great.
don't need to be scared about a quiz and all. You can join. It is a fun quiz, as sir mentioned.
So no worries, we won't give you any marks for this quiz. So you be assured of that. And this is just a fun activity. So let
So they
people
have to
join.
join.
I think if I get a sizable audience, I will start the quiz.
They have to log into joinmyquiz.com, right, sir? And type this
Yes,
code there.
yes. Type the code. Yes, yes. I'm very
Yeah.
sure our students are very tech savvy, so they'll do it. I mean, with ease.
They are very good at that actually.
Yes, yes, I know that, and they love doing something on the mobiles, on their laptops. So I'm really sure they'll enjoy this.
Participant, once again, like you have to log into, take another window. You just log in with joinmyquiz.com. As you log in, you have to type the code which appear in the screen. It is 7771911.
Akila ma'am, so what is the size number of participants who are live into our session today?
Since I'm in the stream, I cannot see the participants, sir.
Okay, okay. Right now I see 26 have joined into our quiz, and still
Yeah.
people are joining. I give another 30 seconds to all of you to log in. So once I start the quiz, then I don't think participants may be able to join. Okay. So I'm starting the quiz with 44 participants. Right. Okay, last 30 seconds. I see still people are trying to log in.
Yes. As we reach 50, I think we can stop.
Yes, yes. Okay, I think we have reached 50 and I don't see people joining in here. So we'll start.
Yes, sir. Yes. Go
So,
ahead.
students, there will be a timer and there will be 5 questions. So you keep on answering as I'm starting this quiz, and you should be able to see are you leading the race or whatsoever. Just check. I think 14 people more to complete the activity. If you can complete it, next 30-40 seconds. I'll be glad to close this quiz. Harish is yet to complete. Yes, Harish is done. Sakti, you have to complete. Shweta, your quiz is pending. Shweta P, your quiz is pending. Rah- Rahavender, I think he's typed the spelling wrong. Raghavender, your quiz is incomplete. Santhia, Saktivel, N, Jayashree, Shalini. 5-6 people more to complete. Okay, I'm ending the quiz here. So you can see the leaderboard here. Harish, Preetham, Gayatri, Pranav, and Ananya. They are leading the quiz here. So we can say the first place is Harish, second is Preetham, and third is Gayatri. So I hope you all enjoyed this small activity. See, a lot of people have got 100% here, so glad to know. Many of them got 100%. There are a couple who scored 40%, but then we're still students, we're still learning it. So just I'll come back on our screen there on right. So, ma'am, that was the end of the activity. I think we have the winners, and congratulations to all the winners. Thank you so
Many
much.
congratulations, winners. Thank you for your participation. And this was a wonderful initiative also, sir. Like to make them participate.
Yes. And
Good, good,
any
great.
questions, I'm glad to answer.
Yes.
Anything.
I will
Okay.
just the question will pop up in your screen and you can take up the question, sir. Now.
Okay.
So the first question is from Prithvi Prakash. Can you just answer this?
Right. See, other components of equity. So equity consists of share capital, reserves. So what they have done is, they have just bifurcated that equity into share capital, retained earnings, and then other components of equity, which includes reserves like revaluation reserve, some foreign currency translation reserve. So these you can say are the other parts of the equity where they have combined in OCE, other components of equity.
Okay. The next question from Radhakrishnan.
Why only US follows gap? I mean, maybe I can just reword this question. See, gap is a very generic word, generally agreed accounting follow practices. So if I take India, India follows the Indian gap. China follows the Chinese gap. I mean, Germans follow the German gap. So you know that the one of the oldest body on earth, I mean, is US accounting body. Their accounting practices has been very strong since many decades. So US gap was a literature which everybody used to follow once upon a time. So if anybody needed any international guidance, then before IFRS, US was one of the country where guidance used to be sorted out. So US has been persistent on that. They follow the US gap for all their listed companies or all their business entity. They are slowly merging towards coming towards IFRS by hosting some joint projects. So for example, the financial instruments which are which is standard followed by banks across the globe. The US standard and the IFRS standards are pretty much aligned because they have been jointly developed by both these bodies, the FASB and ISB. So yes, US companies do follow US GAAP. That's right.
I think one more question from the same person, sir.
IFRS versus GAAP. I mean, definitely IFRS is much better than your local GAAP. Think about a country like Sri Lanka, and if you talk about Sri Lanka, it's a small economy. I mean, think about their people, the workforce. Their body cannot have chartered accountants who will develop the standards every day, so they find it very comforting to take up the guidance from an international body, and probably then their setup can use that guidance and reframe as per their needs. So talking about countries like Bangladesh, talking about countries like Tanzania, so one of the countries for which I have written my the CA material, these all countries are basing all their accounting on the IFRS. So when I talk about local gap is not the way forward. IFRS is the way forward. So IFRS is much better than the local gap, I would say.
Can you take this question, sir, from Sharanya?
Okay, Saranya, your question about talking about call options and put options is quite technical in nature. I mean, given the context that what we are talking about IFRS, but still, since you have raised this doubt, I'll give it a try. See, equity options and call options are kind of a way of trading in stock market, wherein you can place a bet on a stock going up or a stock going down. I mean, how you place a bet in a casino, that this number will come if I roll the dice. That's how you place a bet there. Of course, with this bet, you have to pay certain premium, and if your bet is in your favor, then obviously you get a higher amount than what you paid. And if your bet is not in your favor, then you lose that amount what you have paid. So I mean, you can say that these call options and put options are much more scientific in nature. They're not like your casino bets what you play. They're much more studied and systematically put through as investment strategies there. So because these call options and put options, they are based on equity instrument. They may be based on the shares of a company. They appear into the equity part of your what you can say, the balance sheet. So that's what I would define these call options and put options. By nature, call options and put options are derivatives. You understand that meaning. So sometimes these can also be a liability and an asset. So when it is in your favor, you will call it as a financial asset. When it is not in your favor, it will call it as a financial liability. And that is broadly covered under a standard called IFRS 9.
Okay, though this is beyond the purview of our topic, but still you answered it. Thank you so much, sir. Anyway,
Most welcome.
next one from Shashwat.
Yeah, I mean, IC has adopted IFRS. So I did explain to you, India has converged to IFRS. So we are now having standards, not the old one, what you used to study in your 11th, 12th probably. Now we have Ind AS. So earlier we had accounting standard, AS1, AS2, AS3. That old literature is gone. Now I told you about the convergence of Indian corporates and NBFCs. We have already adopted IFRS, but I said we have not adopted. If you remember our discussion on adoption and conversion, we have converged to IFRS. So it's like we don't eat authentic Chinese. We have taken that Chinese and put an Indian tadka to it, and then we have made it that Indian Chinese. Same way, the IFRSs have been taken up. We applied the Indian tadka to it. Now we call it as the Ind AS. So we do apply IFRS, but in a different name.
Yes. In fact, almost all our laws, we have influence of British law, similar to that,
Yes,
right?
yes, it
Something.
is. It
Yes.
is.
Next question, sir.
Difference between IFRS, CA, ACCA, and ICA. I mean, the comparison is really weird. If you talk about CA, ACCA, and ICAI, then it's a valid comparison. CA means a chartered accountant. He can be an ACCA or he can be ICA. Like, say, I'm an Indian chartered accountant. So I'm a member of ICAI, Institute of Chartered Accountants India. Now I'm pursuing ACCA, that is the Association of Certified Chartered Accountants UK. So I'm trying to become, a chartered accountant from the UK who can practice in UK. So I mean, if I do CPA in Canada, I mean, I'll be a chartered accountant from Canada, Australia. If I go to US, I can become a chartered accountant from there. So I mean, all these chartered degrees allow you to practice in a jurisdiction, to sign balance sheets. So if you become a ICAI member and you go to the US and you say, I will sign a balance sheet, I mean, you don't have that legal authority to do it. Now coming to IFRS, IFRS is a gap under which you can practice. I mean, you can, if you are doing an accounting for a Canadian company, you will apply the Canadian gap. If you are doing an accounting for a European company, you will apply the IFRS gap. So IFRS is a gap, I would say, a generally agreed accounting practice. I mean, if I'm in Chennai, I will speak Tamil, the gap is Tamil there. And if you come to Pune, Maharashtra, where I am from, the gap is Marathi. You will speak Marathi. So IFRS is just a language, and that's the theme of our seminar today.
And we have so many questions coming up, sir.
Yes, I'll try to answer most of them. Some brief about fundamental qualities. See, fundamental qualities are very fundamental. I mean, if I say that, what are the fundamental features of your smartphone? You say, sir, calling. I mean, without a calling feature, a smartphone is worthless. It's a transistor. Sir, somebody will say, sir, camera is a very fundamental feature of a phone. I do agree. So messaging is very fundamental. Now think about financial statements, and an investor is putting in, his hard-earned money. Doesn't he expect certain fundamental features into these financial statements on which he's putting his faith, his reliance? Of course, we do. Something called as relevance. So you must have heard of this word called relevance. So relevance is, we need all relevant data to come in there. If the company is not doing there, you should highlight it there. That is relevant. If the company is impacted by COVID, you should highlight that COVID has destroyed the business of the company. We will pick it up in 1 or 2 years. This is relevant data which should come there. Faithful representation. So you see companies like Satyam, which did a major fraud. So did they faithfully represent things? You had situations in Yes Bank, where Yes Bank, investors were not given their money, then SBI came in. So they didn't give faithful representation of what is happening at their business processes. So I mean, faithful representation is about telling, something which is complete information, which is free from errors, something which is neutral. You saw ICICI Bank, Chanda Kochar hiding some transactions with her hubby's company, Deepak Kochar, and some transactions linked with Videocon Group. So that is something which should come out to the investors, which is not coming out. And we are relying on it. So faithful representation and relevance are definitely the most fundamental feature of a financial statement, as a calling feature and the camera feature is to your smartphone.
Of course, the Satyam scam is the most relevant example for this faithful representation.
Yes.
That is presentation. True. Next one, sir.
I mean, why do we need to adopt IFRS on the whole? Because the Indian economy is quite complex. We have so many industries. So I think it's good that we are looking at the IFRS's global practices, and we're trimming them as per our needs. Uh, that's quite okay, I would say. And I mean, adopting it as a whole will cause a lot of chaos instead. We will blindly be following the IFRSs without going through what repercussions it will have on the Indian companies. So I think I wouldn't agree or advise on that approach of blindly copy pasting those standards and publishing for adoption to the Indian companies.
Next one, sir.
Satya says, is there a possibility in future in India completely adopts? See, possibility, I mean, we have already adopted IFRS in the form of India. We are 90% there. The 10% difference is going to be there. And let it be there. I mean, maybe that is for a better accounting, we have kept that difference. Probably that 90 may become 95% conversions, but I don't think that we can blindly adopt IFRS. Convergence is always better.
Okay, sir. Thank you.
Yes, IFRS, I mean, already there is a lot of future. See, since last 10, 12 years, I've been training at Deutsche Bank and, Bank of New York Mellon, SunGard. All these places are having shared service centers. I mean, outsourcing work comes from, on the accounting comes to the Indian entities. And these Indian entities are supposed to work on the IFRS financial statements. So already when you join these companies, they are expecting you to be well versed into the IFRSs. And already IFRSs are there as a literature in your graduation syllabus and your professional programs like CA, ACCA. So I mean, definitely the future is there. Imagine you becoming an auditor and you don't know what are IFRS. What will you audit? I mean, you're going to check the financial statement of a company, and you take up any company, Tata Steel, you take up L&T, you take up, Ideas, you take up, all the companies. I mean, all the listed companies, HDFC, ICICI, all these companies are based on IFRS, the Indian version of IFRS. So you do need to have core knowledge on this.
I'll just sum up the question, sir. Will this pandemic will be have any impact on IT?
Yeah, will the widespread of maybe affected? In fact, this battle of the COVID challenge has impacted every company, and the biggest challenge which has come not only to IFRS but to all the various accounting bodies is the concept of going concern. So, I mean, we were taught that if a company is not a going concern, then its accounting has to be changed. It has to be something different because this is one of the fundamental assumptions. Now, because of COVID, the situation of companies have deteriorated. Now, is it a going concern or is it not a going concern? What is the litmus test? And there is no accounting document at the moment which will differentiate what is going and what is not going concern. So here the challenge on application of certain principles of IFRS is hanging on just the question mark whether it is a going concern or not a going concern. So this challenge has come because of the pandemic. Now coming to IFRS, they have come up with certain literature, and every accounting body is also coming up with the literature on how to specify what is going concern. You will get a lot of documents on the internet telling that. Now spreading of IFRS, this IFRS spreading is not like we are forcing the countries. Now you adopt IFRS, there is a chocolate we'll give you after you adopt it. It's not like that. Countries will keep on adopting, they will keep on merging if they see potential benefits, if they see they want to join the global platform, they want to join the global race. So this spread, it depends upon the member countries now how they want to take it. Already this is spread, more than 100 plus countries from the globe are have adopted. So there's nothing more left to spread. It's slowly, the whole globe is becoming IFRS except for US GAAP.
Okay, sir.
ACC cannot practice in India, but ACC can enter into partnerships in India, join partner CA firms as partners. Though signing authority may not be there for that ACCA qualified person, but yes, he can definitely do the audits. Second thing, ACCS can, I mean, if you talk about the service sector. The service sector doesn't require you to have a certificate of practice. See, I held my COP, certificate of practice, for a couple of years. I was working with Credit Suisse, also Wipro, my previous employer in the publishing house called Get Through Guides. Now I'm working as a trainer author. I don't need a COP. So just I'm a CA, that's more than enough for me to work.
Okay, sir.
3-4 minutes more, I will answer
Yeah, you
all
can
your,
just can sum up
and
the.
just keeping in mind the time of this seminar, we might have to stop with at a certain point of time.
Okay, sir.
I mean, Meera Sri, I have answered this question. I
Yes.
don't know if you haven't heard what I spoke earlier. Completely following IFRS doesn't make sense. I mean, conversions 95%. Is 95 not good enough for you? So we've already adopted it in a different format, or rather converged it. And which professionals would be affected most? I didn't get you what you mean to say here. I mean, if
So
you
I
ask
think
me, who will
I
be
think
benefited the most, the accountants will
so
be
who will
benefited the most.
no, maybe existing practicing chartered accountants, whether they will get affected. Maybe from that point angle, she would have asked, I guess.
That phase has already gone, because 2-3 years back, when this challenge came, people were like, where will we get the trainings, who will train us, we don't know these IFRSs. But now, after 3 years, their grooming has happened. They've already done the audits for the companies. Lot of literature is there, lot of training programs have happened. So I mean, that phase has passed away. Now it is assumed that you know it. It's like you are aware of it.
Next question from Shashwat
Okay, Saswat
regarding.
says, when a company prepared a statement of changes in equity, we value the uh, share capital of the what? I mean, see, no accounting standard, talks about how to avoid manipulations, or we cannot control the anti-social elements there. So if a person or an entity is unethical, we can only say that these are the principles which you have to follow. So think about, we all have road rules, but whenever there is a red light, still somebody breaks it. I mean, in spite of having all the road safety rules, people are breaking the law. So we can't, change those people who are breaking the law, or there is nothing which IFRS can do. But yes, we can have some, regulatory bodies. So I told about NFRA. So these bodies, see the compliance, whether the companies are manipulating. And we also have company bodies in India like SEBI, who's constantly watching on, insider trading, manipulations. So these bodies keep a check. If things are not right, then they will, question that company, or even ban that company from trading its shares. So of course, people try to increase the valuation of the company by, doing insiders and manipulating shares. But then IFRS can only recommend; it cannot bring in penal provisions.
So,
See, in the school life, I mean, till now, I don't see much of commerce, and especially accounting as a subject appearing. I do see geography, science, biology, all these mathematics appearing there. but I don't see accountancy coming there. So I don't think we should start with IFRS as at the school level, but yeah, basics of accounting would be really fine. In the higher secondary level, which you are asking me, I mean after 10, an introduction is would be really great about the potential benefits of IFRS. So I think colleges, schools are organizing seminars, webinars to do that. But it's okay. I mean, even if you start at graduation, the core studies, it should be really fine. Yes,
I'm
of
not
course,
going.
Big
Yeah,
Four
yeah.
are really adopting. I mean, they're working in this domain. So Big Fours are auditing financial statements of listed companies in all over the world. I mean, they are not adopting. They are using the IFRSs to do the audit. So they have to have the knowledge about IFRS.
I'm just avoiding the questions that has been repeated, sir. The rest of the
Yes,
questions I'm showing you, sir.
I mean, this is a very weird question. Key players in US regarding development of IFRS. This is a very weird question. I think I will not answer this because I mean doesn't make sense. Does a CA with ACCA qualification gets edge over the student who has completed only ACCA? See, one thing which I would like to tell you is do not hold qualifications. I've never believed in that. So qualification should give you a skill. So it should give you a skill to do a task. So I mean, when I did my CA, that time I really wanted to work in a corporate. I wanted to apply my skill sets. Today I'm doing ACCA because I want to teach ACCA qualification more effectively. Though I've been teaching for last 10, 11 years the ACCA qualification, but having a formal license gives me a better edge. In case of you, when you will go to companies initially, whether you are having CA or ACCA, the initial start is you don't have an industry experience. So you always start as a fresher. But then, when you are a double qualified, later down in your career, when you are already progressed from that starter phase, that time definitely you will get an edge. So when you are shifting jobs and you already have that industry experience, that time it really benefits. But you will say, sir, I am a double qualified, other is a single qualified, so I should get double the package. Companies do not work like that. I mean, they'll say, why should I pay you double? Because you don't have any industry experience, and so is the guy. I have to train both of you, and both are on the same understanding level. So probably that doesn't work that way. But again, when you are already in the mode of studies, it's better to complete ACCA and CA. And it's been a recommendation because see, ACCA gives you a lot of exemptions at the college level. So why not take those exemptions and jump ahead and then complete your CA as well as ACCA. Personally, in my family, I've seen one of my nephew. He started with CA, he couldn't complete CA, he flunked many times. His articleship was over. But when he came to ACC, he found it relatively very practical to understand things, and he completed ACCA fast. So I mean, if you have both of the things in hand, then you always have choices where to go ahead, and you can finish both also.
We will take this up as the last question, sir.
Okay, sure, ma'am. Being an ACCA student, which we should have a full knowledge. I see. I will tell you whether you are ACCA student, Indian student, graduate student. The knowledge which you should have is on accounting, and whether you learn Ind AS or whether you learn IFRS, both are same. There is hardly a difference now. So if your teacher teaches you Ind AS 1, Ind AS 2, it is exactly the same standard which is there in the IFRS. It's only a name change. And very few differences between Ind AS and IFRS. So it's okay. You study any of it. You should be able to apply any of it to any situation. Those differences are very minor. You can, go through those differences and master.
Thank you, sir.
Okay,
Thank you
that's
very
the
much.
last question to address. Thank you,
That's
all
it.
of you.
Because the session was really, in the sense, more of knowledge sharing than that of an one-sided thing. So
Okay,
we got to learn so much of so many things from you, sir. Thank you anyway.
thank you, ma'am. Thank you.
Thank you. Thank you.
Thank you, sir, for enlightening us. The session was really helpful for us, sir. Now, Ms. Sindhu, ma'am, Assistant Professor of Department of Finance and Taxation, will deliver the vote of thanks.
Yeah, good afternoon to one and all present here virtually for the workshop. Respected Secretary Shri Ashok Kumar Mundraji, respected Principal Captain Dr. S. Santosh Babu sir, our beloved HOD ma'am, Dr. M. Akila ma'am, our most distinguished speaker of the day, CA Deepak Agarwal sir, the senior faculty and trainer at International Skill Development Corporation, honorable professors and my dear friends, I deem it a great honor to propose the vote of thanks to all who have helped us in making the skill development workshop on IFRS as such a resounding success. So, first of all, I would like to propose hearty vote of thanks to our chief guest, CA Deepak Agarwal sir. Thank you so much, sir, for gracing today's workshop. Thank you, sir, for making excellent presentation and making this workshop very interesting and meaningful. I really mean it, sir. Thanks a lot. I
Thank you
would
so much,
like,
Sindhu, ma'am. I
thank
really
you.
appreciate the kind words. I'm so glad, to deliver this session amongst all of you. Thank you.
It
No,
was
really,
so
sir.
interactive, sir.
Yes, true, sir. Very true.
Well, so I would like to express our profound gratitude to our principal, Captain Dr. S. Santosh Babu sir, for encouraging us to conduct this workshop. I would also like to thank our beloved HOD ma'am, Dr. M. Akira, for her moral support and guidance. I would like to thank the volunteers who have been doing a lot of things. So finally, the participants who have turned up in such a great numbers, not only from our department but also from other departments of the college, thank you so much for your cooperation. So once again, I thank all of you for your cordial cooperation. Thank you so much.
Thank you so much. Shall we
Okay.
wind up the session, sir?
Sure, ma'am. Thank you.
Thank you so much, sir. Great to have you with us, sir.
Yes.
It's a
Bye.
pleasure.
See you soon. Bye,
Yes,
students. I'll see you soon in your college.
yes, sir. Yes, sir. We're waiting for that. Thank you so much, sir.
Bye. Bye.
Thank you.
Bye bye.